Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. In the gold market, currently we see the situation that we have discussed yesterday. We said yes, maybe market could turn to some retracement right now. That's very typical for the gold market, and there is some fundamental reasons for that. I mean, that could be the profit taken on the really tough previous week. So market has reacted on the strong non-farm payrolls release. Today's comments, guys, I'm not really sure that they could justify the action to the upside. Mostly traders speak about the bad data on the Germany industrial production that has fell for the 4%. That's really largest drop since the crisis in the 2008. And they start to speak about some risk aversion and so on, but we know that when the economy turns to the recession, it's really a very weak demand on the gold, because gold is not bearing asset and it doesn't bring any rate, any percent, and to get on investment. It just could save off investments when we speak about inflation, but the drop in the production means anemic inflation and the slowdown in economy growth, and that hardly will support the gold prices in the nearest future. That may be some reaction on the sort of price of this data, but currently I do not see any big reaction on this. Here was the reaction yesterday on this data. No significant action on the gold market on the drop in the production. Well, the second news is that probably China market could turn to some purchases as it has opened after the long weekend. Well, that maybe could support somehow the gold market in the short-term perspective, but hardly it will happen tremendously. All that we should do right now is just wait for another CFTC report and the storages of this bidder fund and take a look whether any demand has appeared. If nothing has happened, nothing has changed, in this case any rally will be doomed, as we said. But pure technically, as we said yesterday, that's very typical for the gold market, and that's why we should keep an eye on the possible bread butter sell. So here you can see the first candle above the 3x3 moving average. So if market will hit this level or better this area within the three closes, other words till the end of the week, if market will reach the monthly pivot point and daily area bought, that will be also the 50% resistance. That could become the nice chance for taking short position, because this will be the bread butter sell on the daily time frame chart, and we have untouched targets that stand at 1180s and even slightly lower. I mean the butterfly on the weekly chart. Well, that's our trading plan, but in the short-term perspective, we can't exclude that this action could continue, because, as we said, yes, the market was oversold here, and it has formed nicely looking the piercing in the cloud pattern that could lead to some appreciation. The target of this pattern, usually the length of the bars, almost the similar situation as on the euro currency. So, and technically this retracement really could fall. I do not see any problem with it, but still I do not think that this retracement to the 1250 even area will change sentiment drastically. Absolutely not. That's normal technical retracement in the current situation. Well, on the intraday charts, we could take a look at the same picture as yesterday. So maybe market here will form some sort of the hand and shoulders pattern. That's also possible. So if you would like to trade this situation, trade daily pattern, you could wait for the retracement right back down to the near around 1206, as right shoulder could be formed here, something of that sort. Retracement right back down to the lower border of this consolidation after this upward action. If this will fall, you could think about the taking long if you would like to make this scalp trade, and if you would like to trade the gold market on the long side of the market. Technically, as we said yesterday, that looks really bullish in the short term, because as market has shown the breakout to the downside, has passed target reach target of this breakout, return right back above inside of this consolidation. This usually leads at minimum to the reaching of the opposite border to the upside, but as a rule this also leads to the same target to the upside. So market should pass, if it returns right back inside of this consolidation, should pass twice width to the upside. First to the upper border, the second to the next target. That's 1249. It's very close to this area. Okay, so somewhere around the 50% level. And later we will see what will happen. I suspect that market really could return right back down, especially we will not see any purchases on the current week. Market could easily return right back down and finally clear out the 1180s area. That's what I will be watching for. At least currently I do not even think about taking the long-term long position on the gold market until 1180s lows will not be washing out, and until I will not get the clear sign that market will show just the wash and rinse and return right back up. In this case we could think about the possible taking long position, since retracement could be really significant in this case. But if market will grab stops below 1180s and will fall below them and will hold below this area, we probably should be ready for deep correction to the downside. Other words, that's been said, current action we treat just as the tactical retracement and trap for the traders who will take the long position here, who will not take profit in time. They will be trapped probably in the wrong direction when the market will start move to the downside. That's what we will be watching for in the nearest future on the gold market.